One of FXT traders reached out to me asking or requesting for my guidance on a trade that he actually analyzed by himself, right? This was Euro USD. I was only there to just analyze with him, and it turned out to be that the trade was quite profitable. So in this video, I'm literally going to give you a free breakdown on how I was literally able to analyze this market, which turned out to be a win. Welcome back, guys. So today, like I said, I'm going to be doing a more of brief breakdown on a trade that I myself and also one of FXT traders did analyze together. All right, I'll be making it very brief. If you have any questions, just send it on the comment section. I'll be happy to assist you. All right, so so far so good. I won't lie, I'm super proud of the existing traders in FXT. Right, for the fact that someone who has just been with us for like 2 months, 3 months is able to do analysis and do analysis that looks exactly like an analysis I could have done if I was to trade Euro USD. Now, for people that know me well, you understand that, and you know that I don't trade Euro USD. What I trade is gold or USDCAD, and sometimes US oil. Right, I don't focus on Euro USD. So what I did this particular day that he texted me asking for my help, I quickly went to Euro USD, did a top-down analysis, understood what was happening in the market, and then boom, I arrived at the same entry level which is spotted as a level of interest, and that is something I'm super proud of, right? So to say less, let's head into breakdown, right? Like I said, I'm going to make it very brief, right? Very brief. So let's head to Euro USD. Yeah, so this was the trade that we literally took. This was where we had a sell operation, right? But I'm going to be showing you guys how we arrived here. So I'm going to delete this. Now, as you guys know, I literally start with more of a top-down analysis. So let's head on to the daily time frame. Let's get to understand what exactly is happening on the daily time frame. So what I can see here on the daily time frame, we had a beautiful break of structure around this region, as you can see. Right, we had a break of structure around that region, and currently we spotted that prices was trading at what? At an extension level, meaning that around this region we want to see prices retracing from there to the downside to create more of this corrective move, right? So around this region is where we get to identify our new higher high. So indirectly, what I'm seeing here is this. I'm seeing a beautiful higher high here, a higher low here, all right, and then a beautiful higher high yet again around this region. So I want to see prices coming to the downside to create some kind of higher lows before pushing back up to the upside. So this is what I draft out, or I extract off the daily time frame. I get to understand what price is doing. I get to have a thought process, a bias, right? I get to spot out my bias, my trading bias. What am I looking out for? Am I looking for a sales? Am I looking for a buy? Right? I want to know what level price is actually trading on. All right. So quickly, I've already extracted that information. I've seen that price is trading above this area of resistance, which was used to form our new higher high, right? So obviously we want to see prices retracing to the downside, making some form of corrective move. So I want to head on to my 30 minutes time frame, which I do spot out as more of my entry time frame. The 30 minutes and then the 15 minutes is what I use for my entries, right? So heading on to the 30 minutes, we can see, okay, this is where we had a very nice, beautiful trend change, right? As you can see it here, we had a very nice, beautiful trend change around this region, right? Thereafter, market was trading what? Impulsively, correctively to the downside, right? So what are we looking out for? In order for prices to make that retracement, right? If I head to the daily time frame now, in order for prices to retrace to this downside level, we need to see internal structure in what trend. Obviously, it's meant to be in a downtrend. So I want to be trading with a trend. what trend have I spotted out, or what trend do I understand that I need to look out for that goes in line with the current trend of the market? That is what a downtrend. So in this case, I want to see prices pushing to the downside because we're trading correctively. So I want to see prices pushing to the downside, making what more of a downtrend structure. Now the 30 minutes is where I did spot that out. So in this case, we've already seen that we had a trend change around this region, telling me that this high is now more of what is set to be higher high based on daily time frame. This high is the highest high market had already made in this particular day. Alright, so as market was trading correctively, it was creating break of structure, and break of structure. So here is the break of structure that I looked out for. So in this case, I can see that market literally made a very nice, beautiful break of structure around this region. Alright, as you can see. Thereafter, we want to identify literally what caused the break. Now, it's important for you to know as a trader that for every BOS in the market, there's something that must have caused that break. It could be supply, it could be demand, it could be resistance zone, it could be support zone, whatever. But it's something as a trader, or is a responsibility for you as a trader to be able to identify these zones and use them as more of what an interest level zone. So for me, I'm going to be using a supply zone. As you can see, I did spot out a supply zone that was here. Now, what time frame did I spot this out? I think it was on the 2 hours time frame. Let's see. Let's check the 4 hours. Okay, 4 hours is clear. Let's check the daily time frame. Okay, it's the daily time frame that I get to spot out the supply. So based on daily time frame, you can also see that break of structure that we spotted out on the 30 minutes. Alright, so you can see that we have a break of structure here. Thereafter, what do we have? We had a very nice, beautiful supply zone resting around the region. You can see as soon as prices retraced into that area of supply, there was a very nice, beautiful reaction. So for me, this area of supply is seen as what more of my buying, my selling power. Alright, that's where my selling power is being identified. Alright, so I literally now want to head on to the 30 minutes, which I do call my entry time frame. Right, on the 30 minutes, we could see something. This is the supply zone that we spotted. This is supply zone, right? Market tapped on it. We're looking for confirmation, and boom, prices gave us a very nice, beautiful confirmation. Here we did spot out that there was a change in direction of the market, where prices changed from what an uptrend to a downtrend. So at this area, we did spot out that there was a trend change here. Now, what did I do, or what am I meant to do? I'm now meant to look for the force that caused this trend change. It's as simple as that. Alright, so I want to go to the 1 hour time frame to be time frame flexible in identifying these forces. So on the 1 hour time frame, I did spot out that a supply zone was resting around here. But it doesn't just end here, does it? No, you need to be time frame flexible, because there's something I've observed in the market, and that's the fact that when you dwell in one time frame, you're going to realize that there are millions of opportunities that you're going to miss out on. You understand? There are millions of opportunities that you're going to miss out on. So let me give an example. Now, this is the 1 hour time frame. We've identified supplies on 1 hour time frame. We also have supplies on a 15 minutes time frame, right? Let me see if it's actually there. Okay, let's go to the 30. I think the 30 minutes that we spotted that. Oh, nice. So we had the supply zone resting around this 30 minutes time frame. Alright, we had the supply zone resting around this 30 minutes time frame. So, okay, this is the supply zone. So indirectly, I couldn't have missed out. Alright, but there's something that is quite important when trading. When you focus on lower time frame, or when you focus on a single time frame, you get to miss out on majority of the opportunities. I think this is not the perfect example, but there are examples which I could have checked, but there's no time for that. But just have in mind that try to be time frame flexible. When I say time frame flexible, I'm talking about you making use of the major time frames, the minutes time frame, hourly time frame, and the daily time frame. You're using that to literally spot out your interest level zone. It's as simple as that, right? So in this case, I've literally spotted out that okay, we had the 30 minutes time frame supply was here. Let me check the 1 hour time frame. So 1 hour time frame supply was telling me that the supply started below here. So what am I meant to do? I'm meant to adjust. Alright. 2 hours time frame. 2 hours time frame is telling me that supply zone started from this low, right, to this high. Fine and good, right? 3 hours time frame. What 3 hours time frame is telling me? The 3 hours time frame is not saying anything. I think it's only the 2 hours that gave us that area of supply, right? Let me check the 4 hours to see if we can see anything. So 4 hours didn't tell us anything. So we're going to be working with what? The 2 hours time frame, where we spotted our supply zone was being identified here to here. All right, you see, I'm trying to make use of time frame that speaks for itself and other time frames. Now, this 2 hours time frame covers supply zones for each time frame and covers at least half of the supply zone of the 30 minutes time frame. You understand? So what am I now looking for? I've already identified the forces that literally caused this boom. It's now for me to now develop an entry. So there was a beautiful liquidity build up around this region. As you can see, we had a very nice, beautiful liquidity sweep here. Right? We had equal high liquidity. And most of the times on interest level zone, when we have this equal high liquidity, market is likely to sweep out that liquidity before pushing to the downside or to the upside. You understand? So, but in this case, this equal high liquidity, market swept out liquidity that was found above it, and then it pushed back to the downside. Now, how do we now get to spot out our entry? It was quite easy. When we saw that there was liquidity here, we knew that okay, prices is likely to take out this liquidity before pushing back down. You understand? So for me as a trader, most of the times I don't really wait for liquidity sweep. There's how we FXT traders smartly do things, like how we get to risk and how we end up being profitable, even if liquidity sweep happens or not. You understand? So I'm just going to go straight to how we're able to derive an entry. So we saw that prices took out liquidity around this level. Right. Thereafter, we're looking for confirmation to take a sell position. We could have taken a very crazy ass sell from this low, which is where the supply zone started from, having our stop loss till this high. But if you check something, the risk on this is very high. Our stop loss is very high. And for people that know me well, you guys would know that I dislike having large stop losses. If it's going to cause me to chill out, wait for another confirmation, which is going to minimize my risk, I'm going to do that. You understand? So in this case, we didn't have an entry from here because the stop loss is very large. Right? So I'm going to quickly delete this and then head on to where we had our entry. So we went to the 15 minutes. On the 15 minutes, we had a very nice, beautiful area of supply. So I'm going to delete the supply above. We had a very nice, beautiful area of supply around this region, right? Now, how do we develop our entry? It was quite easy. This supply zone had presence of what? Imbalance, all right? We had the high here and then the low here not colliding or not touching each other. So that tells us that there's more of a supply zone around that region. And that area of supply was now what we used as our own confirmation to take an entry. All right, so how do we get to enter this trade? We entered this trade twice. All right, I took an entry here, had my stop loss around here. All right, and my TP obviously was below this low, below this particular low. All right, that's why I had my TP. All right, but eventually what happened? You can see market literally just stopped us out. It traded above that area of supply, but does it mean that we are done for the day? No. We decided to re-enter this trade, right? We decided to re-enter this trade around this high where we got stopped out, maintaining the stop loss to be 9 pips, right? Our TP was now literally below this previous lower low. All right, our TP was literally below this previous lower low, and that's how we're able to make like about 1:5.8 from this simple trade, right? This is more of a textbook. It's not, I would say it's not, but most of the times, right, opportunities like this, of course, like they present themselves in the market. But have in mind that because of you've seen me giving a breakdown or telling you how to do a trade like this, it now means that I've given you something called a holy grail. That is not what I'm trying to say here. In all that you do as a trader, try as much as possible to consider risk management as the first thing. All right. like they said, there are things you can control and things you cannot control in the market. The things that you can't control in the market are literally the market movement itself. But things that you can literally control is literally your capital and your risk. So try to focus on more on what you can control and not what you cannot control, right? Because in all that we do as a trader, as we all know, there are probabilities of being right and also being wrong. What matters is how much you're going to win when you're right and how much amount you're going to lose when you are wrong. Right? So this is how we're able to take this nice, beautiful trade on Euro USD. Just like I said, I don't trade Euro USD, right? And this proves to me that FXT strategy works on every single currency pair, commodity, futures, whatever. All right. As long as we have buyers and sellers in that chart, trust me, FXT strategy works perfectly. All right. You don't need to do any tweaking or do anything. All right. So this is literally how we got to analyze and how this trade turned out to be on this very day. Now, if you liked this video, all right, please try as much as possible to follow, like, comment, and then share to friends and family who would love to have access to strategies just like this. This is one of the most easiest strategies that I've just given out to you guys. All right, so thank you, and I'll see you guys in the next video.